Hi folks, welcome to this week's weekly Forex forecast, the first one of 2022. Hopefully you had a good Christmas and New Year. It's Monday the 10th of January. Let's kick this year. Let's make it a good one. Now, if you want to access this weekly Forex forecast, you can do so. Just head over to the forexsignals.com website. You'll see this landing page here. If you scroll right down to the bottom, you'll see all our tools and so forth. And you'll see here over on the left, you've got the Forex forecast. You see all our other tools and giveaways there as well. You've got your heat map and you've got your profit calculator, your pivot point calculator. Anyway, click on Forex forecast and up will come this page here. Now, if you want to get this sent directly to your email inbox, just leave your details in there, click send, and that way, the moment we release this forecast, which is every Monday, of course, it will be sent directly to your email inbox. Okay, so this is the forecast for this week. Now, as I say, if you actually get the forecast yourself, you can actually read the commentary in more detail. Max is looking at a long trade in gold. He's looking at this ascending channel. He's looking for a break of the upper band of the channel and waiting for a test of the 1820 zone. So he's looking at a bullish trade in gold this week. He's also looking for a price equilibrium continues in the NAS100. That's the tech stocks. Okay, so basically he's looking for this range breakout, well, not a breakout, but a support zone at the bottom of this channel for retest at the top of the channel. He's got a target there of 1580, 8070. So that's basically a bullish trade for Max in the NAS. Now I am looking at a euro yen trade. I'm looking at this channel going higher in the euro yen for a number of reasons. Our target level here is basically 132. It's a great trending market, this. And we've had a pullback now into the base of this ascending channel, and likely now that the path of least resistance is to the upside. The base of this ascending channel is actually coming into some structural support as well. So I'm quite liking that. But I'm also quite liking this trade here. This is the dollar against the CAD. This is known as the loonie. Expecting potentially a break lower here and then a move to the downside. Now I'm going to go into more detail about that on the charts in a moment, but certainly the dollar CAD to the downside is basically where I'm positioning myself. So we had quite a busy week last week. We had non-farm payroll out of the US. That's basically the job numbers. We always keep an eye on the non-farm payroll. Came in slightly worse than expected. Unemployment numbers were slightly better than expected. Bit of a mixed bag. We got a really busy week in terms of economic releases for the US dollar this week. All inflationary data out. So as you know, the central bank in the US, they're basically penciling in lots of hikes this year, maybe 4 hikes. So this week is going to be quite an important week. First business week of January, really, with lots of inflation data. We know the Fed, where they're positioned this week, could either cement their view or maybe give a bit of uncertainty. And markets, you know how they react to uncertainty. For now, the dollar seems to be treading water. Right, let's jump onto the charts now and see in more detail what we're looking at. Okay, so let's start off by looking at my faithful momentum meter. As I say, time and time again, I'm not sure why anyone would trade the Forex markets without using something like this. It doesn't, unfortunately, predict the future, but it does tell me what's happening at the moment, where the money is flowing, which currencies are being bought and which currencies are being sold. And as a trend follower, I like to know that. I like to buy these strong currencies and I like to sell the weaker currencies to give me that edge. And trading is all about an edge and exploiting that. So at the moment, you can see here the strong currencies. The strongest currency up there at the moment, this is the daily chart, by the way, is the British pound. The British pound has been benefiting from a rising interest rates. The Bank of England have already moved their interest rates at the moment. Inflation data is still looking very strong, and the British pound is liking that. But what you're seeing here at the moment also is some strength coming into the Canadian dollar, this purple line. This is benefiting from the fact that, of course, they're accelerating their QE program, but also the fact that oil prices are driving higher at the moment. And as you know, the Canadian dollar, the loonie, is heavily associated with the rise and fall of the oil price. So Canadian dollar is looking particularly strong at the moment. I just want to drill down here to the 4-hour chart, and you see exactly what's going on the lower time frame charts. You can use this right the way down to the 1 minute chart. A great little tool for scalpers as well. So you see here at the moment the safe haven currencies, the low yielding currencies. That's the Swiss franc down here and the Japanese yen. They are getting low at the moment. Now the stock market has had a pullback over the last couple of trading sessions, but it does seem to have finding a bit of support, basically meaning that maybe the risk money is going to start flowing back into the stock markets. The currency markets are certainly reflecting that. The low yielding currencies, they're funding currencies, they tend to get borrowed and then sold in the financial markets to buy the higher risk assets. That's why they trade lower. So those currencies are trading to the downside. Look here, the green line, this is the greenback. That's why I coloured mine green. Change the colours, of course. So this is now the US dollar under a slight bit of pressure. Now we had some data out of the US last week, non-farm payroll, as I've just mentioned. But this week we've got quite a lot of inflation data out as well. We know, the market knows, the market is expecting the US to move interest rates this year. In fact, we're penciling in 4 hikes this year after the QE wind down. That is in the market. It's priced into the market. The downside risk to the dollar is much more there than the upside risk. If the inflation data starts to miss this week, as did the job numbers last week miss, then maybe that is going to put some concerns into all those that are pricing in the Fed hike. US dollar is coming under pressure at the moment, and I'd expect that maybe to continue this week, which is one of the reasons why I like to look at the dollar against the CAD as potential short trade for this week. Now, before I get on to looking at the dollar against the CAD chart, let me just show you how you could use this momentum meter for your scalping. So here at the moment, you see the Canadian dollar is strong on the higher time frame, the 4-hour chart, and you've got these currencies that are heading south on the lower time frame chart. You've got the euro heading lower as well. If you drill that down to the 5 or the 15-minute chart, and you see a big sort of move in a particular direction, and it's confirmed on the high time frame chart using this momentum meter, it could be the best currency to trade in terms of a scalper. So this will show you at the moment that a potential scalping opportunity may be there in the euro, which is lower on the lower time frame charts, and the Canadian dollar, which is higher on the higher time frame charts. This currency pair, the euro against the Canadian dollar, is one that you may look to trade from a scalp. Scalp being the lower time frame chart. That's why using this momentum meter is so powerful. No matter what style of trading you are adopting. Now, of course, you can get this if you head over to the forexsignals.com website. Take out that free trial and have a play with it for 7 days. See what you think. Right, let's have a look at the loonie now, the US dollar against the CAD. Okay, so this is the US dollar against the Canadian dollar. This is a 4-hour chart. You see here what I've done here. I put in this key level of structural support. It was respected on the way up, if you follow my crosshairs, and rolled off there. Then we finally broke through, came back and retested it back down there at beginning of December. Hit this new high up here at around the 129.5. Back down to retest. It's been retesting it now on 4 or 5 different occasions. It is key level of structural support. Now, often when these levels of structural supports are broken, these support zones become resistance on the way up. Support and resistance is just where buyers turn sellers and sellers turn buyers. It's where people are changing their position in the markets. Technical traders always like to look at these support and resistance, or supply and demand zones, if you like. So I'm looking at a potential break lower from this support. Maybe then a retest, maybe get into around the sort of 50% of that zone, and then back up to retest. That should then act as resistance. And then the predominant trend, which is basically coming down all the way from sort of middle of December, up from 129 and a bit, to prevail. So back up, retest, and then a push lower. Path of least resistance, I think, is to the downside. Another thing I'm looking at here is a longer term head and shoulders pattern trade. Now, head and shoulders is a form of pattern trading that many adopt. And it basically looks like this. You've got the head up here, which is the high. You've got the two shoulders either side here. We've got a slightly lower shoulder on the right. But a head and shoulders pattern trader will basically look to see the completion of this by looking at the distance between the head and the neckline, the support zone. A break lower, I say we might retest, but then the completion of that trade will be the same distance between the head and the neckline lower. And that would take you right into this support, which is just by my ear over there, which you see is basically back down to retest that 123 zone. Okay, so head and shoulders pattern traders will be looking for this to trade lower if indeed we break. Keep an eye on that. Maybe put it on your notepad to see indeed if this does complete. It might take a bit longer than a week, but certainly the path of least resistance, if we break lower, will be to the downside. That's my little trade plan for this week. Let's have a quick look now at the economic calendar to see what we do have for this week ahead. Now, if you head over to the forexsignals.com website, if you scroll right down to the bottom, you'll see here all our free tools and gizmos as you like. We look here for the Forex economic calendar. Click on that and it pulls up our economic calendar for the week ahead. Well, I say the week ahead, you can select to see what days you want. I like to click out the next 7 days. As you know, the correct way to read these is look to the right, look at the impact column. Anything that's deemed to be high impact will be red. Anything that's deemed to be medium would be yellow, and green would be a low impact news. So the first bit of news on the horizon that the markets will be looking at this week will be in a couple of days' time. It's CPI, Consumer Price Index. It's basically inflation. Now, the central banks around the world, generally they're mandated, normally on a dual mandate, to maximize employment and also to keep a check on prices. Inflation, normally around 2%. If inflation is heading up, then the central bank normally has to move interest rates up. Interest rates go up, so should the currency follow. In theory, that's what's basically happening, and that's why we always look at these economic releases throughout the calendar month. So you see here that the inflation expectations this month is running at 5.4%. 5.4% of prices when they're mandated at 2%. That's basically why you're seeing at the moment the easing of the asset purchasing. Asset purchasing puts money into the markets. They're basically winding back on that, putting less money into the market. They're also plotting to raise interest rates this year to make sure that the cheap money is no longer there, to basically encourage people to save and not spend so much money, which obviously fuels in prices. So we're looking at inflation coming in at 5.4%. Central banks will certainly be looking at that. It's a busy week, in fact, in terms of inflation data out of the US. Not a lot else out in the rest of the world. You're scrolling through. You've got producer prices index again in the US on Thursday. And you can see here producer price index year on year almost 10%. Now, of course, producer prices is inflationary as well. If the producers of your goods and services, if they're having to pay more money for their raw materials and so forth, of course that filters through into the cost they sell to the high street. So it's an early sign of inflation. So we do like to keep an eye on producer prices. The impact tool here is putting it down at low impact. I'm not sure. I think it's quite an important release, the producer prices as well. We've got initial jobless claims as well. It's another employment number. It's not so widely looked at as the non-farm payroll. And later on in the week, of course, on Friday, we've got some more US inflation data. It's all about the US this week and their inflation outlook. We've got retail sales, basically what's happening on the high street. Are people spending more money? If people are spending more money, that basically means prices have to go up. And if prices have to go up, maybe the central bank must have to move interest rates sooner rather than later. So you can see the retail sales coming in at up 0.3. Again, it's a good early sign of inflation. If people are not spending money, then of course it has a drag effect on prices. There are other factors affecting inflation data, things like supply chains and so forth. But the actual retail sales is a component that is factored in to the inflation number. And lastly, we've got business inventories and the Michigan Consumer Sentiment Index on Friday as well. Certainly keep an eye on that. Now, if you don't know what any of these data releases are, if you head over to the Forex Signals site and so forth, if you just click on the release, it will give you an explanation of exactly what the release is and its likely impact on the markets, how to read this data. So there is some education in there for you as well. So all in all, not such a busy week, pretty much all related to the US inflation outlook on the heels of the non-farm payroll last week, which came in less than expected. I think it's quite an important week in terms of the US, but the rest of the market is looking for quite a quiet week. Okay, so I hope you found that useful. Now, if you want to get, as I say, this directly to your inbox, just leave your details in there. We'll send it to you the moment it's released. No spam. We're not sending your email address on anywhere else, just pure Forex forecast if you leave your details there. Now, if you want to come and join us in our trading room, we are streaming live up to 7 times a day. We've got now 2 new mentors have joined the team out of the US. So we're now truly 24 hours a day. So we're covering all market zones. If you want to take part in that, you can do so. Come over to forexsignals.com, take out the 7-day free trial. If you don't want to stay, you don't have to pay. I think you've got everything to gain and nothing to lose. We've got lots going on in there, lots of trading education, over 200 hours of trading education, lots of trading tools, everything from pattern finders, looking for those high probability setups, risk management tools, heat maps, momentum meter as well that I spoke about. If that's not your thing, that is not a problem. I'll see you next week. Have a good week.